That's your money saying it's time for a McDonald's run. Because with new McValue at McDonald's, you get more than you expect. Like buy a 6-piece McNuggets and add a McChicken for just $1. Your money says let's go. Get more than you expect with new McValue. Prices and participation may vary. Valid for item of equal or lesser value.
Reality radio for a really great future. We're talking real money.
Real money goes with real life. And the more real money you have, the more secure your real life is likely to be, although there's a point of diminishing returns on wealth, they say. But, you want to have a little more than a lot less. And we're here to help you get to that little more in a sensible, sane fashion based on science, academic research, and just plain old uncommon sense. 855-935-TALK is our phone number. We would love to answer your questions, to talk with you about your particular financial situation. We do it every Saturday from 3 until 5 Eastern, noon to 2 Pacific at 855-935-TALK. We also take calls during the week. You can send questions into us via Talking Real Money, the website. We're here for you a lot of the time. Not all the time, but a lot of it.
Yeah, and
I'm Don.
Yeah,
that's Tom.
And I'm always here, but you're out on the Finding Don tour right now, and how's all that going?
Let's see,
finding
we're in Charleston,
yourself? Yes.
Charleston, South Carolina.
Indeed.
Where I found that it is actually hotter than Central Florida.
Didn't think you'd be able to find that location, did you?
No, I didn't think I'd find some place that was wetter and hotter. Literally on we got here. What did we get here, Deb? On Wednesday. Wednesday.
Yeah,
Wednesday.
4th of July was Thursday.
90. Maybe we got here on Tuesday then. No, Wednesday. 97 degrees, normal temperature, but the temperature, the feels like temperature,
right?
115. Honestly, I don't ever remember feeling anything that hot. It was miserable.
Wow, that's pretty extreme.
And we were baking in our tin can.
Yeah, you were. So could you
to paraphrase Elton John? We're baking in our tin can.
Is there like a river or something you could go jump into?
There's
a sea or something.
Jump in a lake. There's a lake right here behind me. I can jump in the lake.
Okay.
There's a swimming pool.
Yeah.
But there is an ocean.
You have not opted to do that.
Well, no, the ocean is our next stop. On Monday, we head up the coast to near Myrtle Beach, where we're going to actually spend a few days at a beachfront campground. Right there.
Which I have to think is rare for your type of touring.
Yeah, you don't find a lot of beachfront campgrounds. This is a state park, and it's right on the front, right on the beach.
Right, so that's exciting. Okay. Yeah. So Don's finding himself, and if you need help finding yourself, you can call us too. We'll be glad to help with that, right?
That was good.
You like that? Okay.
Because
because the reason I brought it up, because you just wrote a great piece. I love this article. I love the magazine. We've talked about the magazine before, Third Act magazine, which I think is wonderful. A lot of great writing in here, but the issue that just came to my mailbox, yes, I still get things in my actual physical mail. You wrote a great piece about kind of retirement. About
you mean you got a paper? You got the paper version?
The paper version. I mean, I've probably been up online for a week or two, but I like reading things. You know that. I actually still read the Seattle Times, the Wall Street Journal, Bloomberg, all these things. They're periodicals. But I thought this was good because, people oftentimes equate retirement with money, and money is an important part, no question. But I like the way you worked it backwards, not just in the article, but in your life. Right? You said, here's what we want to do. I want to move to a place that has a significant arts community. I want to live in a place that's smaller. I want to live in a place that's more comfortable, maybe friendlier, maybe the weather's better. That's what we're looking for. Can we figure out to make the money work for that, rather than we got to have this pot of money to go do that? And you've landed, I guess, in very western part of Virginia eventually, correct?
Yes. Okay. Yes, eventually.
But the article was good because it spent some time talking about, you sat down and you figured out the things that were important to you and Debbie after you stopped working. Right? Mm-hmm. And
it's funny, you brought this up. I wrote this so long ago. I forgot what I wrote. I just read it online again. I go, oh, that actually was not a bad article.
No, it was very good. I think for anybody within 10 years of retirement, it's a great piece because I think it helps you figure things. Again, retirement has always been this date, I'm going to quit, etc. Do I have enough money? It really very often is not looking at all of these other parts of it. And by the way, the issue is wonderful because in the middle of it, there's the 50 ways to thrive in your third act, which I think is fantastic. Live with purpose, engage with it. I really think it's a great list, which I'm going to steal a lot of. But your article does spend some time talking about, well, no, but it gets back to the call we had just a couple minutes ago with a gentleman who said, I've got this $175,000. Can I take out 7.5% a year? That's a very high withdrawal rate. But then I remember our question was, well, do you need it? No, I really don't. You pointed out in your article that your plan is to basically have enough from Social Security to provide the day-to-day. Then the other money, and by the way, I think that makes sense for the caller too. The other money could be to supply those things like doing the bucket list stuff that you want to do, right?
Right.
I mean,
or
I think
as Marty said, in case the elephant falls on her.
Right.
In the last hour.
Which probably won't happen in Virginia. I guess it could. Do they
Circus
have a
could
wild
come through.
Zoo? Yeah, they were something. But
circus? When the circus comes to town with the big top?
But what I liked about it was... Well, you already live there. What I liked about it was the fact that you could live off. You've come up with, if I wait till 70, I've got my social, Debbie's, etc. That's a number. Then the other money could supply. I think that's a very smart strategy. I think it's very shrewd that many people don't.
And you know how that number is so easy to get. You can go to socialsecurity.ssa.gov.
That's it.
And get all that and actually start planning this weekend. Maybe this is the time to start planning your retirement. 855-935-TALK is our number.
Tom and Don are talking real money.
Do you need a little help with your investments? Set up a free, no-obligation appointment with one of our advisors at TalkingRealMoney.com.
For your real life and real future, Tom and Don are talking real money.
Again, the number to call to get questions answered, problems solved, 855-935-TALK, 855-935-8255. Call live while the show's live on Saturdays or anytime, 24 hours a day, 7 days a week. And the article Tom was just talking about before the break, there is now a link to that article up at TalkingRealMoney.com. Just click on the woman listening to the show on headphones. On the very front
page. Some smarty pants just texted me and said, you're not headed for your third act. You're going to about the sixth act. It's not very nice. Yeah, so.
Actually, that's for me, I'm probably on, my plays run a little long. Or I'm probably like, it's a 12-act, a life in 12 acts.
There you go. I hope that's several days. It's not one of those things where they make you sit there for like 9 hours, is it? Please.
It's an overnight show. It's just kind of bring your own bedding, and some of it's a little boring, but other parts are thrilling and exciting. And
sure they are. To you,
I'm not even going to go into the other things they might be.
Okay.
Never mind.
That's article's worth reading.
855-935-TALK. What?
That article's worth reading.
It is.
I think it says a lot about the other aspects of retirement, and that's, by the way, one of the things we try to do in our classes too. Is spend a little more time. We've always just talked about sort of building money up, how to take Social Security, those things, and we've tried to spend more time on the non-financial aspects, which we find are more and more important. I guess I put it that way.
Right, but we really do. We devote in the winter. We devote an entire event to covering just the whole range of retirement at Retire Me. That's our big one. Oh wait, isn't there one coming up? Aren't you doing one with Rick at some point this summer? I think I lost Tom. Where did he go?
No, I'm not answering any more of your questions. I've had enough of your questions today. That's it.
Why did you leave?
I just thought I'd get a little exercise.
No, but I know. Aren't you doing a thing with Rick Gregorick this summer?
No, I'm not.
Or in the fall?
In the fall. In October.
In the fall.
I don't have the date yet. I don't have the date. We do have the date for my next class. That's July 24th. And then you've got a couple coming up in August. And then we have the big road show coming up in September. So we do have stuff coming up.
Yeah, we have a lot of stuff. But and by the way, just I'll give you a little preview. One of the classes I'm going to do is the science of retirement, the science of retirement investing, which is pretty standard. That's the really meaty class. But I am creating something brand spanking new that is all about finding a fiduciary advisor. And is your advisor a fiduciary? Are they acting in your best interest? And what we will do too is after the class, you can bring all of your paperwork and we're going to sit down and we're going to tell you whether your advisor is acting as a fiduciary or not.
Okay. You're going to do that before your
It's
brain
gonna be
fries
exciting.
in your metal thing there. Anyway, I'll leave it at that.
Well, no, so at the next break, I'll turn the AC back on. Well, yeah, we can go to the phone.
Okay.
Sure, I'm fine.
All right.
I like callers.
All right.
Yeah, I'm sorry. Interrupt me.
I'm sorry. Vincent joins us now on Talking Real Money. Hi, Vincent.
Hey, how you doing?
We're doing well. How can we help you today?
Yeah, so I'm 27 and I'm working full time as an engineer, and I was just kind of curious about kind of maximizing some savings and what to kind of save for the long term. My company matches my 401k up to like 4.5%, and I think right now I'm putting 7% in, but I'm just kind of doing the basic plan that the investor that they have. I think it's like a
target date
high
fund.
Kind of risk, right? What was that?
Like a target date type of fund? Is it one mutual fund that your money's going into? Okay.
Yeah, so it's like they have like a target date exactly like 2055 or whatever.
Yep.
Something around that.
Mm-hmm.
That's good.
I just want to know, is it good? Okay, that's what
Well, it's not. It wouldn't be my favorite. I mean, because if you're really
okay.
It's okay. I mean, you don't really have very much you don't have much exposure of your money to smaller and more value-oriented companies. I'd have to look at the plan to try to help you to build something that was more sophisticated. Here's another idea. Are you single or are you married?
I'm a single dad, actually, of 2 kids.
Okay. And what is your income likely to be in 2019?
It's about 82 to 85.
So you're close. Because I was thinking what you could do is you could have a Roth IRA in addition to this money, and then in that Roth you could have exposure to some of these other, like smaller companies, value, that kind of thing.
He should be able to do that because his adjusted gross is going to be, I think, low enough. Also, if you want to, are you working for a big Seattle company?
Yeah, it's a big, yeah. It's not
what
like
kind of business are they in?
It's a utility.
Utility.
Okay, because we have most of the bigger companies in the Seattle area up on our 401k website, 401411.com.
Where we've looked at the plans and try to help you build a portfolio that would be more diversified than just owning a target date fund, which Don said is okay, but at 27, that could cost you money over time because you don't have exposure to some of the other things we'd like you to own. So you could
Small
go there.
company stocks, more international.
Value, that kind of. You could go look at 401411.com to see if your company's there. If not, you can always send in your plan to that address, and we'll be glad to analyze it for you. But if you want something simple today, I think it's great that you're doing 7, they're doing 4.5. That's terrific. I think the only add-on I would think about would be a Roth IRA. Go over to Vanguard. You could own the Vanguard small cap fund there, for example, give you some more exposure to something like that.
Small cap value. Don't they have a small cap value fund?
I don't know. They have a small. I think it's just small.
Hold on.
Did we lose you, Vincent? We did. We lost him. He got so upset about the Vanguard fund. But that's one of the problems with 401ks, just using a target date fund. It's okay. It's not as diversified. It doesn't expose you as much to those other asset classes that have helped you gain more return over time. Did you find you're looking up a small value?
My internet connection is just really slow.
Oh, okay. It's hooked up to the water heater, probably.
Really slow.
Wait, help me out. If it's 115 degrees outside, why do you need a water heater anyway? You want cold water, right?
Actually, it was on that day. I got to tell you, I took a cold shower. I went, oh, that feels pretty good.
Jump in the river or something.
Yeah,
no, it wouldn't be. You won't.
I wasn't complaining.
Water. Yeah. Or set it outside and let it boil in the 100-degree weather. No.
It won't. But Tom, you apparently did not take basic physics in school.
It's the reason I'm not a doctor.
It's not going to boil at 97 degrees.
Okay. That's 212 or something, right?
Cap value index. VSIAX.
VSIAX. Okay. There'd be
Vanguard small
so Vincent
cap value
he could
index.
add that in a Roth IRA to give him
Yeah,
exposure
that
to
would
some
be
of that.
awesome.
Sure, there you go.
And then he could also, if he doesn't have about half his money in international stocks, or at least 45%, he could also add the total international market fund at Vanguard and really get the diversification that he needs to reduce the volatility too. 855-935-TALK.
Tom and Don are talking real money.
It may not be the sexiest website in the world, but it's your one-stop shop for real money information. TalkingRealMoney.com.
Your guides to a really great financial future. Tom and Don are talking real money.
Our number again is 855-935-TALK, 855-935-8255. Because it's a holiday weekend, we're giving away one of our financial books of some sort. It's a surprise.
Classic.
We're not telling you
classic.
which book. One of our classic investing books.
Darn near bestseller. Well, darn near.
Darn near best giveaway.
All right, yeah.
855-935-8255. We love helping you on the show, and it's really easy to get through on holiday weekends, particularly. You know, I gotta the crypto crazies are crazier than normal.
They're back.
Well, they're getting crazy again
Because they're
I'm
making
looking at
a lot
a
of
chart.
money.
I'm looking at a chart of Bitcoin.
Yeah.
For the past 12 months, it is the scariest, bumpiest thing. It's like it's been going along in the $8,000 to $3,000 range.
Well, yeah, that's
for
sure.
a
Typical
better part of the
trading
year.
range, sure.
And then just a few weeks ago, it spiked up to almost $13,000 a Bitcoin.
And what is it? What did it close the week at?
Almost 12,000.
All right.
This is just insane. I don't believe there has ever been and I'm going to put it in quotes, quote, investment, unquote, that has had this kind of extraordinary volatility. I mean, I've seen gold volatile, but not like this. I've seen stocks volatile, but not like this. Not compressed into this short a period of time and these huge swings. This is a scary thing. If you're starting to get excited about it again because the price is up, well, one, you're like $10,000 too late, and two, it's just a bad, scary idea. 855-935-TALK's our number. Yeah.
855-935-TALK. Let's go back to the phones where we talked with Tom. Hi, Tom.
Good afternoon.
Hello.
I received from in an inheritance a little account at Smith Barney, and maybe I shouldn't have mentioned their name.
It's okay.
Sure.
It's okay. We don't care.
We don't care. Fine.
There's a little bit of cash.
Yeah.
And an account with Nuveen. That's a nice little.
Of course, there is.
A nice little amount, but
Yeah.
I learned that old pal Smith Barney is making 3.6% off of that, and I'm not sure what I'm making.
Whoa! What Nuveen?
3.6?
What's the name of the Nuveen fund?
Can't be making 3.6.
Yeah, they could. What's the name of the Nuveen fund?
Oh, geez, I'd have to. Let's see, how close is it?
Wow,
Where am I going to find
that's.
I could go find it, but it would take.
We could say usurious, but that wouldn't even be the right word there. That's
As a matter
outrageous.
of fact,
Do you know what it's invested in? What kind of what's it invested in?
I don't know.
Okay.
Okay.
But it's weird that it just popped into my mind. I realize now how I learned that. I went to one of your seminars, met with your gentleman for the Olympia area. Later.
Derek, maybe?
Tom, I think.
Tom McLean.
Yes.
Tom McLean.
Okay, yeah.
And and when we got done, he gave me this book a month later or whatever it was, 2 weeks, and it had in there what he thought we should do and what the perspectives was for what you guys could do,
Yeah.
et cetera, et cetera. And he went through also what I have now.
Yep.
And I see in there is where it said.
Okay.
Okay. Yeah, we looked. So we did the
3.6%.
research on that fund. That's called a blueprint, future blueprint that we do.
I got to tell you,
Yeah.
there are funds
Wow.
out there. There are
That's
ETFs
nuts.
and
That's
closed-in
nuts.
funds. And Nuveen did a lot of closed-in funds with some very, very, very high expense ratios.
Hang on,
Just
Tom. We'll
outrageous.
take this up in a
Hang
minute
on,
here.
Tom. We
Yeah.
got to take a break. We want to talk more about this. But yeah, these things, some of them are ridiculously expensive. Trying to find one in the 3 range. But I've seen some that are quite high.
Crazy.
We'll be back with more. 855-935-TALK.
Tom and Don are talking real money.
Just about everything you need to know about money can be found at our website, TalkingRealMoney.com.
Reality radio for a really great future. We're talking real money.
I just realized I'm in the land of that other Boeing plant.
Yes, you are. You're at the other
what-
side of the country where they still build planes. They do build planes. I shouldn't say still, because it's only been there for about 15 years, maybe something. Not even that long.
Yeah. It's the 87 factory.
Yeah, it is. They crank those out, not as fast as the 737s, but pretty doggone fast too. They do like
Till
1.5 737s a day.
It's amazing.
It's
It's
absolutely
incredible.
Yeah,
They did.
Now they're
yeah.
all
I'm
parked
sure they've
from
shut
here
that down
to
for a while.
Portland, but no, they're still. They haven't slowed.
Exactly. They're running them down the interstate.
No, you're laughing, but they're all out sitting out in the parking lot waiting to get approved to go back
That's
into the
sad.
skies. But yes, they're building a lot of them. We still have Tom
Our number is
online.
855 9 I forgot the number again. 855-935-TALK.
Yes.
855-935-8255. We'll go back to Tom, who has
Yeah.
a Nuveen fund.
Yeah.
The most expensive Nuveen fund I can find right now is about 2.5%.
I was going to say even that's high.
I don't know.
So we don't.
During the break, I went and found your
The blueprint.
Future Financial
Yeah.
Forecaster.
Yes.
And it says expense ratio, current portfolio would be 3.6%. Now, but that's my only investment.
What
Then
did you
it's-
find the
that's-
ticker on the fund, or the name of the fund?
No, I didn't.
Oh, okay.
No, I didn't.
I'd have to look at
Well,
that again.
I got to tell you, you want to close that account. You just want to leave.
Either way, that's expensive.
How much money is there, Tom?
Not a lot. 20, 30.
Yeah. Well, I mean, do some tax planning. If you have a big gain, and I can't imagine you would with an expense ratio like that, because you're probably not making as much as they're making, I would begin the process, at least in 2019, of liquidating that and moving that money into something with a far lower expense ratio, like maybe those funds at Vanguard we talk about.
Yeah, which would be
where they
I can't
charge
even do the
1/10
percentage.
of 1%.
Yeah, I can't even figure out how much less that is than
Yeah,
3.5%.
I have an account at Vanguard, but I just have cash sitting there. I'm sitting on the fence on what to do with it. I have problems pulling the trigger like a lot of other people, I imagine. But,
Yeah.
is it possible to call Vanguard and have them just call
Yep.
Smith Barney and just yank
Yep.
it from them?
Yep, they'll handle that for you.
Yep.
Sure.
They'll
And
bring
this-
it over.
In kind.
Yeah, what they will do, Tom, is they'll set up a Vanguard brokerage account for you.
Well, it
They'll
sounds
bring
like he
the
already
securities
has one, he
over.
said.
Well, he has an account. Yeah.
Yeah, okay.
If you don't have a brokerage account, they'll set one up. They'll move it over in kind because they can hold securities
Yep.
from other companies in their brokerage account. Then I would suggest that you talk to them about liquidating that in a tax strategic
Yeah.
way. You
How
need
long-
to
how
look
long
at
ago
your
did
tax
you-
situation.
How long ago did you inherit that money?
That was about 8 years ago.
Oh, yeah. You're going to want to look at that closely.
Yeah. So you do need to have a little bit of a tax strategy
Yep.
to make sure you don't have gains that kick you up into a higher bracket this year.
It needs to be done properly, but the bottom line is, yes, Vanguard could move the money over, or pardon me, move the security over, and then they could help you come up with a strategy to sell out of it over time.
And
That's what
then,
we're trying
Tom,
to say.
Yes.
you got to quit trying to time the market. That's what you're doing when you say you can't pull the trigger. You're
Yeah, I
waiting
know,
for
I
it to
know.
go down. But then when it goes down, everybody's going to say, oh, this is
Doesn't feel
terrible.
good, yeah.
Don't get in.
Yep.
It's got to go down some more. And then it'll go down some more. And people will say, this is the worst thing ever. Don't get in yet. And then it'll go up. And they'll say, well, that's all right. It's just going up a little before it goes down again. And then it goes up and then it goes up. And then you're going, oh, I got to wait for it to go down again before I can get back in.
Your asset allocation should reflect your need for return, your ability to take risk, and how long until you need the money. That's it. It has nothing to do with current markets, future markets, how we feel, et cetera,
Political
et cetera.
climate, anything.
Because that stuff is always there. Always there.
Oh God, I know. Yeah, I know.
We're not beating you up. We're not trying to beat you.
No,
up.
you're smart. You're smart. This is just emotionally
Yeah, I know.
very difficult.
It is.
This is why we keep telling people. And let me make this personal, Tom. I was for 30 years a talk show host giving people advice all over the country on the radio, and I would say, you can do this yourself. You can do it yourself. I always believed that until around 2001 when the Trade Center got blown up.
Yep.
And then people were doing stupid things, and I kept saying, you've got to keep your plan, and they went, no, I can't. I'm too emotional.
Yep.
And it was then I realized that there are a few people who can invest on their own, but they're rare. Most people need a good 100% fiduciary, fee-only advice provider to keep them on the right track. That is essential. Tom, thanks for the
Yes,
call.
great call.
855-935-TALK is our number, 855-935-8255. We've got time to sneak a couple more questions in, but you need to make them soon, or you're going to be leaving them on the answering machine for me to answer on the podcast next week. 855-935-8255.
Tom and Don are talking real money.
Tom and I believe in helping everybody become a better investor. That's why we offer lots of free knowledge at TalkingRealMoney.com.
For your real life and real future, Tom and Don are talking real money.
Don McDonald living the dream as he crosses the country in these silver bullets. Me tied to the hot radio studio here in Seattle, here to help you every single week. If you see him on the road, honk twice if you're an index fund investor. Honk once if you're selling an annuity, because he'll respond. Isn't that how it works? I always forget it.
I don't remember the codes. It's been too
No,
long
you
since I
don't.
was on the
No,
road.
I know.
The on the road code.
Yeah, there you go.
855-935-TALK. That's our number if you want to talk to us on the radio, but you can also call that number anytime, 24 hours a day, 7 days a week, and leave questions for the podcast. And Karen, you're next on Talking Real Money.
Hello, Karen.
Hi, how are you?
We're doing great. How can we help you today?
My question is that I have 3 IRAs through a credit union. 2 are Roth and 1 is traditional. The credit union was taken over, was bought out by another credit union, and so previously the investments were through Securities Americas. Now they're through LPL Financial.
Yes.
And in the last
I made a
year-
face.
Go ahead.
Oh.
Sorry.
In the last year since that's happened, I've been getting kind of pressure to switch from a brokerage account to an advisory account.
Yeah.
And I've been trying to find out some more information about them. But when if I Google advisory brokerage account, the only information I find is actually LPL Financial's own published information. And so...
And there's going to be a lot of variability there, by the way, because one sort of location of LPL may do this differently than another. They may charge completely differently too, by the way.
Mm-hmm.
Anyway, go ahead.
Okay, and I haven't been able to get a clear picture on what the fee was. I was told.
I'll tell you.
The first
I'll tell
one
you.
we talked was 2%. The second was 1.5%. Yes.
Well, they're going the right
How much
direction.
money? How much money is in all of the accounts that you
Total.
have? Total.
Between these 3 accounts, I think it's about $160,000.
Yeah, it's going to be 2. You
Okay.
can pull up. There's a wonderful resource, but here's the part of the problem with brokerage firms like LPL. You see, there's this website. It's Advisor Info, ADVISER info.sec.gov. It's a government website where all investment advisors have to post their disclosure documents. And if you went to, for example, you went to our firm Vestory, you will find that there is one disclosure document. It's called a Part 2 brochure. But when you go to LPL, there are 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17 different products.
Very confusing. Yeah, I agree.
And they all have slightly different fees. But LPL and other brokerage firms, let me just pull up one of them, for example. They generally run on smaller amounts, amounts under $1 million, somewhere between 2 and 3% per year.
That's a lot.
So if it's at 2, it's at the low end of what is typical. 1.5 on $160,000 is highly unlikely. Although remember, these fees are negotiable.
Yeah, they could. They
can
you an
negotiate a lower fee. But they also have a lot of hidden fees, and I'm looking at their disclosure document, and they have some conflicts of interest. They can have a lot of other little bits of money coming their way. I personally, this is my personal opinion, having been a broker who was once recruited by Linsco Private Ledger before they were LPL.
Yeah, right, yep, back in the day.
I wouldn't work with them on a bet.
Okay.
They are a sales-oriented firm, a sales-driven firm. They are going into the fee-based business, but it doesn't mean as a fee-based advisor that they can't sell you something on a commission now and again.
Which is an important differentiation from fee-only. A fee-only advisor charges you a percentage of the assets only. Fee-based, as Don correctly points out, is someone who can charge a fee and then sell you a product.
And they also claim, Karen, to be portfolio strategists.
We talked about this at the beginning of the show. Yeah, like, here's the new idea.
They're going to play with your money.
Right. Here's the hot thing you got to do. So let me ask you another question. Are you comfortable managing these 3 accounts on your own, or do you need someone to do it for you?
I guess I don't know.
Right. I think that's,
I'm going to tell you how you should find out then. Here's what I want you to do. 2 things. Okay? Because we're talking $160,000. It's an IRA. IRAs are portable. They can go anywhere.
2 Roths,
IRAs and Roths,
one. Yep.
They can go anywhere.
Yep.
Go to talkingrealmoney.com.
Okay.
Do something that I bet LPL has never done. Take a risk survey. We call it the risk quiz. RASQUIZ.
No
Take
cost
that.
and no obligation.
No cost, no obligation. Nobody calls and bugs you. Take that. Then determine your risk tolerance. Then go to the little button on there with the woman fixing her own car. There you'll find our do-it-yourself 2-fund portfolio. Build a portfolio of those 2 funds. Your cost per year for those 2 funds will be less than 0.1% per year, Karen. 0.1.
Okay, but if you decide you can't do that, then we also have a list of advisors on the website, right? That you could look at to use. I forget which picture. Which picture is that?
That is the guy holding the help sign.
Okay, so you could, if you want to help. Yeah.
I did look at the risk assessment thing a while ago. It's probably been a year or more.
What was your score?
And I don't remember what it was, but I had a fairly high tolerance for risk.
And how old are you, Karen?
50.
So you're young.
Oh, you're young.
Yeah, so
I'm so danged old now. Really, if you had a high tolerance for risk, you could probably do an 80-20 or a 70-30 of the Vanguard Total World Stock Index and the Vanguard Total Bond Index. You do that, you leave it alone no matter what the market does. Every year, if stocks do really well and you get to 75 or 80% stocks, you sell some of those and buy some bonds, or vice versa.
The funds, the individual funds.
The individual funds. And you leave it alone until you need the money. It's not that hard.
Okay, I've always left everything alone.
Yeah,
you're the perfect candidate for this. Then
we would not stay at
Karen,
LPL. You'll be fine.
You're the perfect candidate for this.
Could I ask
really,
for one?
You
said 2 things she could do. Could I ask for one more?
Sure.
Can you fix Don's water heater too? Because he's using cold water for his shower now. It makes him very crabby. You know, I don't know if that's asking too much. You got to take a quick trip to the south.
Brand new water heater too. I just had Ray Leomotis. Whatever. What's Ray's name?
I don't know.
The guy from the show you watch.
Yeah.
The CEO guy. Ray he owns Camping World.
Oh, Lemonis.
Oh, that
Marcus Lemonis.
Ray Lemonis.
Not
Marcus
Ray,
Lemonis.
Marcus, come on.
I don't know. Marcus.
Did he come by?
No, his firm put the darn thing in. I'm trying to get him to fix it. So do you have a connection with him?
I'm going to go into the show and say, you guys don't stand behind your products, man.
They're telling me 2 weeks. I'm going cold showers for 2 weeks.
We're veering here.
No.
Karen, I hope that if not, look at the list of advisors and get some help. But Dawn correctly points out,
Thank you.
You should be able to do this on your own. It would be far. It would the cost comparison. It's not even in the same universe. How much less you'd be paying, and if you could do it on your own,
it is a far, far cheaper thing you'll do than you will have ever done before.
Exactly. And yes, someone out there fix the water heater before we hear about it again soon. Thanks, Karen.
I'm
Great
off
call.
next week. Tom will be doing the show next week because I'm going to a wedding on the road.
Fully showered
Hey,
and clean. You can count on it.
fully showered and in a sport coat or something. Take care.
Tom and Don are talking real money.
Would you like to talk to a real investment advisor for free? Set up an appointment at talkingrealmoney.com.
Your guides to a really great financial future. Tom and Don are talking real money.
And if you want to learn why we believe the things we do and how you can use this kind of science-based information to build more wealth for your future, don't miss the Science of Retirement Income coming up really soon in July. Tom's teaching it. It's a lunch ed class. Tickets are available, but they'll sell out at talkingrealmoney.com.
We hope you realize that the information provided on Talking Real Money is for educational and hopefully enjoyable purposes only. Providing personalized financial planning or investing advice takes time, so please consult with a really good fee-only fiduciary investment, tax, or legal advisor. We know a good one. Investing must always involve risk. In other words, you can and probably will lose money at times. Also, as much as you want it, no one can accurately and consistently predict the future. So past performance doesn't tell you a darn thing about what the future will bring. Unlike many other programs that say something similar, Talking Real Money is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Vestry, a fee-only registered investment advisor. Thanks for listening, and please visit talkingrealmoney.com for more information and disclosures. That's a wrap.